Hello, my name's Neville Howlett, and I'm here today with my colleague Tom Dane to share with you the introduction of our new sub-indicator in our paying taxes study, the post-filing index. For some 11 years now, we've been collecting data on measuring the tax cost and pre-filing tax compliance for our case study company. But the challenge has always been that actually the interactions with the tax authority can be equally burdensome in terms of post-filing as much as pre-filing. And therefore we've been keen to introduce a new index which is comparable on a like-for-like basis, but that has its own challenges. So Tom, how have we introduced the index and what does it actually cover?
So what we look at in the post-filing index is two scenarios, one on VAT and one on corporate income tax. For the VAT scenario, we ask for our case study company, how long would it take for it to claim a VAT refund on an acquisition of machinery? And for the corporate income tax time, we look at whether the company can correct a voluntary error in its corporate income tax return and how long it would take for any audit. On the VAT side, we measure how long it takes the company to make the refund claim and how long it has to wait to receive the money. And then on the corporate income tax time, again, we say how long does it take for the company to do the paperwork to correct the error in this case. And then if there is an audit, how long would it last?
And what are the first year's set of results look like? What have we found?
So on the VAT aspect of it, of the 190 economies in the study, 162 have a VAT system, and in 93 of those, it's possible for our case study company to make a refund claim under our very specific scenario. Where the company can make a claim, on average, they will wait almost 22 weeks in order to receive the money back as a result of the claim. On the corporate income tax side, there are 180 economies in the study where there is a VAT, and in 74 of those, a voluntary correction of an inadvertent corporate income tax error is likely to result in an audit. And so where there is an audit, it's likely to last about 17 weeks, and it will take the company around 17 hours to make the initial correction and to deal with any audit.
Thank you, Tom. So we're well and truly up and running with our new post-filing index, and we have a good set of results for our first year. It's going to be interesting to see how those develop over future years. We're always keen to get feedback on our indicators in the paying taxes study, so please feel free to get in touch with us with any comments that you might have. And also recommend that you go to our website to have a look at the post-filing index results and have a look at the results for your country and to compare those with those for the region and with the global averages. So thank you very much for watching.